So I was wrong. Well, kind of wrong. So before we talk about the egg on my face, what I think is going on in the greater market, what are some opportunities that stand out to me right now, and the trade that I think no one is talking about, let's just talk about this Disney trade that I talked about last week. It's pretty much played out perfectly, up to 270% on the options. One of the great things about this is even if growth starts to turn over into the end of the year, I think, into recession, something like Disney is really resilient because streaming does so well in recessions, even as the economy pulls back. I think that the total takeover of Hulu is also really fundamental in that thesis as well. Remember, Hulu's actually profitable and only second in revenue to Netflix, which is crazy because they're fifth in subscribers. It kind of shows you how well they're faring in the streaming wars. I mean, most of these smaller companies still don't even know how to become profitable. You have Hulu, Netflix, and YouTube. I mean, YouTube is still God, King, Emperor. Let's not forget, YouTube dwarfs all of these companies. People freak out about TikTok. Like, YouTube has 1 billion more monthly active users than TikTok. Okay, somehow they still don't meet these ladders when people are comparing the streaming companies. YouTube somehow isn't included. And since we're pivoting to Google, let's just give a quick shout out to one of our newer Discord members who made a killing buying calls after Google's earnings. Quite the confidence, good research on that. Well done, VP. But back to the Disney trade, I think we're going to see some consolidation here as expected. This is a great time to take profits, roll with a portion of those profits, look for the next gap up to $100. Trade is still in play. Awesome setup, still in my opinion. Even if the greater market turns over, I like this position. Now let's talk about the greater market. We see some people going over the technicals, doing cute things like inverting what happened in 2022 onto 2023. And as you can see here, it's almost a perfect alignment with what's happening in 2023. And that would make you believe that, hey, it's going to be a continued rally into the end of the year. And of course, we had that Elliott wave charting that we talked about in the past that shows the market going to 480 into the end of the year. However, like I said before, even if I was wrong on my initial thesis, which I was, it was invalidated, and it's why I played so many calls last week. Even though that happened, this charting, in my opinion, is still not valid, okay? I don't just want to be right. I want to be right for the right reasons, okay? And this isn't it. If we look at the fundamental analysis and we look at what the bears are saying, it's a very consistent story, okay? The market will turn over. Hedge funds are going to sell. They're going to do some tax harvesting, especially with the large dispersion between the performance and the Magnificent Seven versus the Russells. And, I think it's a very strong argument. However, you can see this was put out on October 15th. The market's just been melting up. So, of course, it's going to keep going, right? Wrong. Well, kind of. Let me tell you where my head's at right now. Now, when we take a look at the Fear and Greed Index on CNN, we can see the market's definitely greedy. Already, I'm taking this as a sign of, okay, time to not be so bullish, trying to take some of those profits off, trying to pull back on some of my exposure to the upside. And we could see that, hey, that fundamental analysis, stock price strength and breadth, both align with that. Then we look at the put and call options. This market is extremely one-sided on its call options. Everyone is buying calls right now in this market. That is a huge red flag. So if we ignore all that research and all that bias and we just look at the technicals, what is the chart saying right now? Here's what I've got. And it actually has some alignment with some of the theses that we've talked about. Okay, I think we're going to get a turnover right here, right now in the market, a retracement back to 425. However, I think then you're going to see a 5-wave pattern that brings us to 510. And we see good alignment for this outcome on both the longer time frames. That's going to be your X wave right here, and also on the D wave right here. Don't give a lot of credence to this Y wave. I haven't actually mathed that out. It's just there as an example for the pullback that we'll still likely see coming into next year. This is what I'm saying is my highest probability outcome right now at this moment. Does it make the most sense with the greater fundamentals? Well,
my experience in markets is that the stock market is usually the asset class that is last to know about a recession. Like if you go back to 2007, right? Like home builders crapped out at the end of 2005. The subprime mortgage lenders crapped out in 2006, the ABX, and the stock market made a new high in the summer of 2007, and nobody could believe it, and yet it did anyway. And this feels very similar to me.
And right now, that makes a lot of sense to me too. That's Jared Dillian, if you want to look him up. That's someone I actually disagree with a lot, which is why I watch a lot of his content. I think it's important to be able to hear both sides of the story, take in all the information. It's almost like a superpower nowadays when everyone's so addicted to groupthink. All that said, I'm still fairly uncertain about where the index is heading, what the macro environment looks like. All of this is very confusing. It seems like we have huge dispersions in what people think right now. What do I do in these times of uncertainty to find ways to make money? I channel my inner financial Elmer Fudd, and I go hunting wascally wabbits, and I go stock picking, just like we did with Disney. The only thing I'm certain, and the bond trade, which I think is probably one of the best ideas to go long on bonds. But we've talked about that to death. So let's talk about Tesla here. And make sure you keep watching, because the pick after Tesla, going to surprise you. I love trading Tesla because Tesla historically does not have a high correlation with the index. It runs on its own merits. And we have a very interesting setup right now. We could see that we've actually seen extremely similar setups to this inverse head and shoulders, breakout, back test, breakout, back test. And I'm looking at this potential rally that could come around, and I'm saying, looks pretty spicy to me. So when also we're looking at the TTM squeeze for alignment on this, what I really want to see is this weekly start to roll over. We could see it if we see the RSI break over this SMA. That'll be a huge signal for me to get very bullish on Tesla. We could see this chop just like we have in the past. We could see it chop a little bit, but we get lots of massive moves, right? Overall, this was 150 to 300 pretty much. So I'm looking at this to potentially send us to new highs for Tesla, and for this to be playable for several months. And it doesn't really have a high correlation with the S&P, which makes it very appealing to me to watch and see if we get this same pattern to play out. Maybe this actually turns into a 5-wave pattern to the upside. Very bullish to me. In the short term, I'm bullish right here. We've already been playing some calls on it this week, been very active on Tesla. I think that is about to pick up as well. This stock has my eye. Now let's talk about the trade that I feel like no one's really talking about. I traded Boeing this week after the headline came out that Saudi Arabia was making a major purchase for some 787 Dreamliners. And then I started looking at the greater market for airlines, and we can see that they're all turning over at the bottom. So then I looked at the ETF, and we can actually see a similar occurrence like we did with Tesla, except our RSI has already crossed our SMA. Our weekly is turning over. The daily looks very strong. The RSI looks very strong. If we actually look at the options here, we can actually see we're extremely one-sided on the calls. 20,000 call positions versus put positions. And we can see that in December, we can see huge liquidity picking up here. Open interest, massive positions. People are getting very bullish. I think airlines, which could be kind of 50-50 into the winter, depends on how cold the winter is. We've talked a lot. We've talked, especially to people on the podcast, about how we're likely going to have a warm winter, which is why UNG is so low right now. Hint, hint, that might be another trade idea. I'll be keeping an eye on airlines. I think that's a good trade right now. Add it to the list of things that have my eye. And that's going to be it for this week's report. I hope you enjoyed. Please like the video, subscribe to the channel. Helps a bunch. Hope you find this content helpful. I'll talk to you more in the Discord. And remember, there's like 15 other things that I don't talk about on YouTube ever. They're only in the Discord, where there's a bunch of other traders talking about different ideas that they have. Not all of them agree with me. And that's what makes it so amazing. So go join the Discord. You'll be happy you did.